Top three things in my notebook: number one, deflation; number two, 10-year bond yield; and number three, earnings season. Deflation just continues to be pervasive. So if you look at what happened yesterday in the CRB index, you look at break-evens, you look at any read-through on inflation, really, the CRB index hit yet another new low in the face of the U.S. equity market rallying on no volume into the bell. But 216 on the CRB index gives you a down 6% move for the year to date, down 31% in the last 6 months. And now, yes, you can see that manifesting it into really corporate earnings in the corporate dialogue that you're going to hear from companies like Cat Tractor today. Point number two is the 10-year bond yield. Again, bumped up a little bit intraday. I think you saw 184, 185 on the 10-year. Easy 10 basis points to pick up on the downside there. So, again, 1.75 is support with no support below that to 152. So, again, if you break 175, a move towards 152, I mean, people aren't set up for that, so don't pretend that they are. They continue to be bearish on bonds. And again, just because you missed it doesn't mean you can be bearish on it. At least you wouldn't be able to do that at my firm. Third point finally is earnings season. It's just terrible. I wrote about it last night. I wrote about it this morning. Just to contextualize where we are in rate of change terms, you really only have a third of companies now reporting accelerations in top-line growth, and largely that comes on the consumption side or the early cycle part of the economy. All the late cycle stuff looks terrible, and it has been. The start of the earnings season was bad with the financials. It's getting worse now as you get through. You look at the commentary, even Procter & Gamble. I mean, they're just like, hey, McFly, the biggest move in world currency history actually infected our P&L. So, again, I'll go back to this over and over again, and this will leave you with the top three things. But I've always thought that the next crisis is going to be perpetuated by central planners. The central planners, you cannot argue, have not perpetuated this currency move. And the currency move is perpetuating the earnings drawdowns. So that's that. Those are your top three things.